Owning a stock is nice, but what if I said you can get paid for owning one? You can earn free returns by doing absolutely nothing. Hello everybody and welcome to Finance Frog, where we save smart and invest smarter. Today we'll be talking about dividend stocks. If you have not already, like, subscribe and hit that notification bell for all future videos. Without further ado, let's begin. So, what are dividend stocks anyway? Well, let's break it up. First, a dividend represents a piece of the company's earnings shared amongst its shareholders. The amount awarded is determined by the board of directors of the company. Typically dispersed quarterly, dividends can be in cash or reinvested as additional stock. Secondly, a stock is a slice of ownership stake or portion in a company entailing rights to its earnings and assets. Put them together and you get partial ownership of a company and rewards for taking part in the ownership. If the company makes money, you do as well. Throughout history, dividends have equated to an abundance of returns. According to Hartford Funds, going back to 1960, 85% of cumulative total returns of the S&P 500 can be attributed to reinvested dividends and the power of compounding. Dividends also catch the eyes of investors, as you are rewarded for owning their stock, no matter the year, age, or stock type. On top of that, according to Dow Jones Indices, since 1926, dividends have contributed approximately 32% of total return for the S&P 500. Now let's look at an example. Let's take a look at the famous Coca-Cola company, also known in the market as the symbol KO. They have been one of the most consistent dividend-paying companies and have consistently awarded shareholders with payouts dating all the way back to 1987. The most recent payout was on March 13th of 2024. If you owned one share of Coca-Cola, you would have earned yourself 49-cent dividends by doing absolutely nothing but owning the stock. It may not sound like much, but these payouts add up. To prove this, if you owned 10 shares, you would have earned $4.90. 20 shares, you would have got yourself $9.80, and so on. Here is a chart showing the dividend earning potential from Coca-Cola on March 13th. The dividend earning potential is truly limitless. Now, those previous numbers sound all fine and dandy, but you must take into account the share price. The share price of Coca-Cola on that day was $61.12. So let's say if Mike wanted to earn the $4.90 dividend payout, he would have had to own $611.20 of Coca-Cola. But what if Mike did not have that much money to dump into Coca-Cola, but still wanted to capitalize on the amazing dividend payouts? Mike can take advantage of something called a partial stock purchase. It is like taking a small piece of the cake, but still tasting the same amazing flavors. Some investing platforms or super apps such as Robinhood and M1 Finance allow users to purchase a stock at any price as low as 1 cent. So if Mike bought only $5 worth of Coca-Cola, he would still be able to capitalize on dividends. Be sure to check out the links in the caption to get free stock on either platform. Dividend stocks are incredible stocks to leverage and add to your investor portfolio. One strategy the top investors utilize is dividend reinvesting. Using dividend reinvesting, they earn dividends on their stocks and then automate the dividends earned to be reinvested in a stock or their entire stock portfolio. You would be truly amazed on how powerful this strategy is and the returns you can receive. Not sure which stocks will consistently pay out solid dividends? According to the Motley Fool, they named a magnificent 7 for all dividend stocks. The stocks include the likes of Microsoft, Coca-Cola, Procter & Gamble, Chevron, Home Depot, JP Morgan Chase, and United Parcel Service. There are many more amazing dividend-paying stocks out there as well, so be sure to conduct research before investing in any stock. Dividend stocks can be powerful in investing as well as reinvesting. They could be granted through individual stocks, index funds, or even ETFs. ETFs have the possibility of being even more powerful than stocks or even dividend stocks alone, due to them being made up of a diversified group of stocks. To learn more about ETFs and their value, be sure to check out this video explaining the ins and outs of ETFs. Other than that, we'll see you in the next one. Remember to always save smart and invest smarter.